Trading cram. What is traded in Forex? 1. Currency pairs. To order this complete cram session, inbox me at memedicine@gmail.com or subscribe at memedicine.com. Trading currency pairs. Okay, so we're going to explore what's being traded in the Forex market. The simple answer is money. Money is what's being traded in the Forex market. Although the simple answer is money, what I need you to realize is that you're not actually holding anything physically. All this money is virtual, it's digital, electronic. So from now on, we'll be referring to this money as currency pairs, because to make any type of trade, you have to exchange a pair of objects. We are trading one currency for another. This type of transaction makes us Forex traders. Alternatively, you can also say that we are exchanging one currency for another. Trading most common currency pairs. Now we are going to explore the most common currency pairs traded in the Forex market. First, we have the United States dollar, the euro, the yen, the Japanese yen that is, the British pound, the Australian dollar, the Swiss franc, the Canadian dollar. And last, although I don't know the exact percentage of market volume this currency occupies, we have the New Zealand dollar. So the abbreviation is NZD. I'm going to say, this might not be an exact number, that the market volume that it occupies is approximately 1%. So we can say that 1% of the $5.4 trillion traded on a daily basis involves New Zealand dollar, and that's still a significant amount. All right, so yeah, there we have our New Zealand dollar. There are others, but these are the ones that we will put most of our focus on. In addition to concerning yourself with the currencies that are most heavily traded, study the health of the economy of the countries of origin of these high volume currencies. For instance, if a certain country has recently experienced a collapse in the value of their currency, that would not be an ideal currency to purchase. You want to be able to make a profit. Now, it would be advisable to sell money from that economy in exchange for another country's currency. Take the United States, for instance. After the November 2016 election, we watched the Obama administration end and the Trump administration began. Globally, traders holding US dollars began to feel certain sentiments about the health of the US economy as a result of this transition of power. The outcome of this prevailing sentiment is that these traders decided to go short on the US dollar, or they sold their US dollars in overwhelming amounts and bought into other economies that they felt were more stable, because their feelings led them to believe this was not good. When I say this, I mean the transition of power was not good for the US economy. Eventually, this phenomenon was reversed, and these traders sold the currencies they had believed to be more stable in exchange for the USD a second time around. These sentiment-based market movements happen very frequently.
Give me pound, give me pound, give me euro, give me pound, give me pound, give me euro, give me. I'm international, baby, I'm international, pay me.
Do you take check?